Good day, fellow investors. The predominant comments were about ASML and how can I explain the risk and reward there. What are my thoughts on ASML? Let's discuss this. Some say it's the most important company in the world and you just need to be holding it for 10 years, as it is the tools, the picks and shovels for the chip industry, AI, whatever will come. Plus, it is also the most bought and most sold stock with the hero, which is an European broker. Stellantis is the second, and we discussed that in this video. Check that if you haven't. What I want to give you is a regular value investing perspective on ASML, what we can know and what we can't know, and whether it is a good bet at this moment in time. So if we check the stock price recently, it is down 33%, and there also a lot of commotion about buying now, and if it goes back to where it was, you make 50%. 33% down, which means if it comes back is 50% up. However, if I look at from a longer period, it is significantly up, did really well over the last 6 years. Now we have to see how will that trend continue, also compared to the valuation P ratio of 35, and we'll discuss a lot of expectations on what is priced in and what isn't. The news there, the stock is plummeting on slower projections for 2025 as the company cites slower market recovery. But we'll go a little bit deeper in those projections because at the end it's all about valuations and what investors are seeing. You'll see how this is priced at the moment. Now, we go to the last earnings, all great there. If you pause here, you read, you see all great, market growth, growing dividends, growing buybacks. But the question when it comes to investing is always about what is priced in and what isn't. What is the risk and reward of my investment at a certain price point? Great business, gross margin of 50%, net margin of 27.8%. I'll round it up at 25 just to be more conservative. Great numbers, growing dividends, growing return for shareholders. We are now at 36 billion returned to shareholders. But if we go to the statements, everything is still great on the upside potential of AI, and that is where the investments are. However, other market segments are taking longer to recover. It now appears the recovery is more gradual than previously expected. I think that when we discussed Intel, the recovery was about to maybe start in 26, so that's always exuberant management versus the things that we all seemingly knew in the cycle. Just the AI boom changed a little bit things on the AI level, but the rest of the market, nobody was seeing it before 26 except for gamblers. But perhaps the most important comment here is the further guidance for 2025. They expect net sales to grow to a range of 30 to 35 billion, which is the lower half of the range that ASML provided in the 2022 Investor Day. And if you go to the Investor Day, these are the projections. 2025, 30 to 40 billion, and then we have the gross margins. If we are 30 to 45 billion, that is already, let's say, 10 billion lower from here. That's 25% lower on the lower end and the higher end. And that explains perfectly also the stock price going down. Higher end prediction, lower end prediction, and immediately that is reflected in the stock price because those are big fluctuations there. And we have to see now also 2030, 5 years, 6 years from now, 44 billion and 60 billion. That is, again, a 25% difference. And that also leads then to different valuations because first, there is a P ratio of 35 and you have to also calculate the P ratio there because if they hit 60 billion, let's say the P ratio remains 35. If they hit 44 billion, the P ratio also will contract, and then it will be, let's say, 20. And that is where the huge volatility comes from in the stock price. I have made just small calculation here based on the current price. If they hit 60 billion in revenues, profit 25%, 15 billion, the P ratio on the current stock price is already 17. If we are at 44 billion, profit 10 billion, let's say, P ratio is 26, which is still high, and we are talking 2030, keep in mind. So that explains the ups and downs of the stock. If we look at the P ratio, exuberance above 60, not so much exuberant, we are down to 24, we are now closer to the 30s, but it can also go much lower, let's say in those sector downturns. We are now in a semiconductor downturn with good supply and low prices, and now if AI slows down for whatever reason, expectations not as expected, not so fast to reach profitability, implement it in everything, then ASML has still 50% down, and it is not even an asymmetric bet to make bets. If we go back to AI, we can go 50% up from here, go back just to where the stock was a few months ago. Okay, but if AI isn't there, you go 50% down, so practically not an asymmetric bet. And even if you're a gambler, if you're betting, the 1% yield is nothing from a fundamental perspective. If you're betting, this is not a good bet at the moment. You can have fun, you can play with it, but also from a fundamental perspective, we have to go back to at least a lower valuation to have, let's say, 2 upside for 30% downside to make it a positive asymmetric bet. And yes, holding for 10 years, but even the company tells you what its capacity is, so it cannot go much more around of that. If I put now ASML into our value investing quadrant, I think the reward is perhaps better than Apple and Microsoft because it is pretty predictable on what will happen. They already have their customers, they have these technological advantages that benefited. So the reward is a little bit better, not staggering with a P ratio of 34. There is some risk, but it will be compensated over time by the growth from a fundamental perspective. So there should be some long-term return there because of the quality of the business, but still the reward is too low from that perspective to include it in any kind of value investing portfolios. Plus, as I said, it can jump up 50%, it can jump down 50%. So again, it is risky on that side without margin of safety. So very interesting. I understand that there is a lot of commotion, a lot of trading there, but for now, not a fundamental investment and not even a good bet. I'm sorry, but there are better out there. Thanks for watching, and I'll see you in the next video.